Hey everybody, just getting ready to start the day today, and got some good volatility popping in right now. We just had some big jobs data come in. Interestingly, this volatility started coming in right around 8 o'clock, probably just in anticipation of the news release. So apparently the market's right now like the jobs data, but we'll see what happens once the cash session opens because sometimes these big pushes can just get reversed in the cash session. So we'll just sort of sit tight for the time being. Yesterday's analysis worked out pretty good. So in the pre-market, we were having this big push down, and I mentioned there was a bunch of levels we could consider on the way back up. I took some trades down in here. I had two winners kind of on the way down, and then as this started pushing up, this was a really strong push, and I started scaling in on the way up. I wasn't sure how high it was going to go, and this was sort of my final line in the sand here. Was this last red line up here. This is a 15-minute chart of the S&Ps, by the way. And so I was scaling in as this thing was pushing up, and I was quite a bit underwater at one point, but I was pretty confident that we weren't going to take out these highs. So actually, my last entry was right under this high. I think I took one here. I think I had three entries total, or maybe four, but it was something like that, like one around here, one around here, one around here on the way up at all these different levels. And then, kind of hooray on the way down. I ended up closing my last position out early. I wasn't sure if the market was going to make its way back down the way we were building this sort of consolidation up here. And again, it was getting kind of close to lunch, and I just didn't want to be stuck glued to my screen and feeling like I needed to check things all day. So I took the last one off probably at kind of break even, but I was able to cash in some profits on some of the later scale ins that I took there. So, this yellow channel that I have here. You can see the top and bottom. This top of this yellow channel was sort of our last relevant structural high based on this 15-minute chart. And so you can see we failed to take that out yesterday, and then we failed to take it out overnight as well. And so, we're taking it out now, and we'll see if this holds. Now, I did, as I mentioned in the analysis yesterday, as soon as the market opened yesterday, I had an order sitting there to take just put on a quick little hedge. So we opened down here, and I had an order I just put a little SQQQ, which is the inverse ETF of the NASDAQ. And I still have that on. I want to see sort of how we deal with all this. And I'll obviously want to see it on the NASDAQ as well, because we've just been really struggling. See, all we did was return to this area of congestion here. And, and then we'll see kind of how we deal with this. If we don't get through this, I still think there's some downside potential. And we talked about where some of that downside potential could be. Just going to be removing some of these shorter term support and resistance areas. And so you can see this bottom sort of held right well. We had this area sort of drawn off here. So we kind of just want to see how we're going to deal with this. This is basically where we have value right now. And what can sometimes be interesting to see, I'm just going to throw on the session volume real quick. And we'll go to like a 5-minute chart. I think it's easier to read this with. And what else I want to do here is be great if I could get some lines in for my value areas. I don't use the session on here a lot, session volume on here a lot. So does this one not give me lines for the value areas? Yeah, it doesn't give me lines. That's a little bit annoying. So we just kind of want to look at where, you can see our point of controls. We're kind of like struggling. The value areas are kind of overlapping a little bit here. This value area was kind of right in line with this one. So this is really like a balancing. And then we, spiked up, but really failed miserably on that spike up. And then sort of, again, value areas back in the same, like these 3 days, almost 4 days, really almost 5 days in a row of price value being the same in here, right? And then here we started to explore price downward, and you can see volume trailed off a little bit, and we're just kind of coming back into value. So that I'm not super confident that we're going to just rally totally bullish from here. I'm not saying it won't happen. I'm just saying I don't have the evidence um, for it yet to personally feel confident about that. And really, what I'd like to see, is just to get a little bit more of a big picture here. You can see this is our value area high that we're just kind of coming up to now of the last however many days, right? 1, 2, 3, 4, 5, 6, 7, 8 of the last 8 days. All the value's been here, and we're still basically within that range. We poked below it yesterday, and all we're doing is coming back into value. And so this is essentially, see this, like this is a perfect bell curve. So this whole area here is like a giant balancing area. That's what we would call it. And we attempted to break out of balance, but couldn't really build any value down here yet. And so we're just coming back up into it. Maybe we're not going to explore lower, but we certainly could. And we just want to be aware of that. And the reason I say we certainly could is if we look back on our larger time frames, so this is our 4-hour chart. There's a lot of drawings on here for my liking, but I think some of these levels are still kind of important. We just want to be aware of. I'm going to take out some of these ones. So on this bigger picture, like I still see stuff down here that might need to get tested. And until I see us really, we're building some price action up here, which is good. So that kind of shows that this is a little bit more of a convincing break above here. And we might sort of consider that we're no longer, this teal range is no longer relevant, that perhaps we need to redraw this as something. And again, I'll change this color so we don't get confusing. We kind of did this low to high, just to the top of that white range still, and kind of probed it and failed, probed it and failed. And so I just see all these like probes kind of happening. And it just gives me a little bit of like cause for pause, you know what I mean? It just makes me a little bit cautious of this current rally. You can see we're already fading the move. When we get down to our lower time frames, we're already failing the move. And I'm going to show you something else that's sort of helpful to know that we're not quite ready to jump into like really like expecting this to be a trend day quite yet. And so just I think just big picture, you can kind of see where I'm going here. Like we're struggling up here. We're struggling up here. And when you see these kinds of market profiles shaping up that look like this, let's just catch this rally to present. So see this P shape kind of shaping up here. Sometimes that's indicative of this becomes profit taking, and then sometimes profit taking being met by new short positions. When you see that kind of it kind of goes up, and then tons of volume comes in here. So when you see this kind of volume, but price isn't moving out of this area, it just keeps getting gravitated back. That's telling you that while there is some buying pressure, there's also quite a bit of selling pressure happening here. And again, just something that we want to be aware of, that this could be indicative of longs liquidating their positions and entering into short positions. And this would be sort of a distribution in that sense. You can see now we're back inside of this yellow range. If we go back down to our smaller time frame, right? This is the yellow range we were talking about from here to here, or sorry, from this high down to this low, right? As we were doing this downtrend on the 15-minute. And we've not broken that important structural high, okay? This is what I call a structural high. So we've made other highs within it, but this is what we consider a structural high. And this is right now this could change, right? It's still pre-market, but right now what we have is an attempted breakout and failure of this structural high. And if that's the case, then if we can't break this and start building value up here, basically above 42.03, then I think we might expect either more consolidation in this area or potentially some downward pressure back down to the bottom of this channel and potentially even taking out the bottom of that channel. And that would look like a bearish trend day if that were the case. And again, just to kind of, do I already have the session volume on there still, or did I remove it? I removed it. Let's go back to that session volume, because I think it's helpful sometimes to see previous day's sessions. So this was yesterday, and it was kind of a trend day in the beginning. See how we basically, we had a lot of kind of balance here, right? So all this value sort of in the same area. And then we broke down out of that balanced area, and we started trending downwards, and we started building volume down here. And this elongated market profile, right, where it's not like thin and then a whole bunch of volume, this makes you start to feel like there could be room for continuation. But then we came back up and started building even more volume up here by the end of the day. And then you can see now today, so far in the pre-market and overnight session, we're just building this value area, right, where the volume profile is brighter. I wish on TradingView it gave you some lines for the value area here, but this value area is completely inside of the previous day's value area right now. So as long as that stays the case, if we have a value area inside of a value area, then we're looking at, ranging. But if we start breaking down and then breaking down this more and building more value down here, and if today we start to get anything that starts to look like an elongated profile, meaning that instead of a big wide lump here, that everything's sort of evened out, if we start to get that even long profile, that's where we start to look for a trend day, and especially when we're breaking down out of balance. Like this was a strong balance area up here, and then we started breaking down out of it. And if we continue that, I mean, look at this rejection candle so far. It looks like we're popping, might try to pop back above this yellow range, but I think today could kind of bring us anything, I guess, is the moral of the story. I think we need to be nimble as the market opens, because this jobs data could push us into an upward trending day, which we'd have to get, outside of all this stuff to really trend upward. I mean, we got to break this white range and this purple range here, which is, again, 42.10, 42.11. Like we really need to break those if we're going to have a trending upward day, and we need to build value up here. Notice when we tried to probe up here before, very little volume took place, right? So there's no sellers didn't even come in here. Like this was just nobody kept buying anymore. That's basically what you're seeing. This is just, there's just no buyers. Nobody's coming in. There's not heavy selling pressure. There's just not buying pressure there. And that happened even before, our previous highs. Previous highs up here, where there was a lot of volume up here, which indicated selling pressure, and that's where we, kind of rejected off of in that overnight session. We just came up there, and sellers didn't exactly step in. It's just, again, that just was nobody buying. There was not enough interest in buying at that point to carry prices higher. So again, looks like we're popping up above this yellow channel. That's going to be a good indicator for us as to how today can go. If we can hold above that level, again, that's about 42.02. Holding above that level would certainly be helpful. But again, if we're going to really do this, if we're going to have a trend day, we need to get above 42.10, and we need to start building some volume up there. And when we get up here, we don't want to see like price kind of halts and gets like a big bubble. We don't want to see that like P-shaped profile on the volume. So if the volume profile on this, I'm just going to do like a crude drawing. If it like kind of comes up and then you start to get like a lot of volume in here, maybe there's just less volume down here. If our profile starts to look like that, then to me, that's not good. To me, that means this rally is getting met with a lot of sellers. Likewise, if we get sort of the opposite, and we get a ton of volume sort of loading in the market down here, and then we spike up and kind of trail off, that's not really good either, because that's going to be very similar to what happened here, where we had a lot of volume down here and came up, but there wasn't the force behind it to carry price higher. And by force, I mean we need volume. So what we'd want to see if we're going to really trend up is a profile that maybe has some high volume areas down here and might get thinner in some areas and then get kind of wider. And it's just sort of like elongated and a little bit more uniform. Not that it's not going to have peaks and valleys, but it's not going to have these really pronounced high volume areas on a trending day, as because we want price to be sort of exploring and finding where value is going to be. When you start to get that high volume build up and you get that on a rally, if you get that P-shaped profile, whether it takes place in a single day or if you have to compound the profiles of a couple days to see that P-shape, just like we did looking at this, 4-hour move. If we kind of take this whole thing and then we see that up here we get that P-shape, this becomes a balancing area. And if we're long, we want to start getting cautious when we see that. That doesn't mean that we can't rally. Okay, I want to be very clear about that. It doesn't mean that we can't rally, but it does mean that the market is reevaluating. It does mean that some longs are liquidating positions, and it could mean that those longs are also being met with new buyers that new sellers that could be long-term time frame short sellers, longer-term time frame short sellers. So be super aware of that. Let's see if we can pull any key levels out of here for today. So far, I just have those levels that I'd be watching for as far as like if we get a break. As far as if we're going to reject from anything or if we're going to find resistance anywhere, I think this little bracket up here becomes an area, that we want to watch. Again, I just, there's not a lot of, there wasn't a lot of volume up here to begin with. So, but we can see this little high volume node here, and we get this little, that's our point of control for that area. But we'd probably have a broader area of supply if we were going to draw it out, just to give ourselves some breathing room. If we're going to scale down and just look for a reversal, it might hit that level exactly, which is 42.25 if we're going to reject. But we might also just come into like the bottom of this zone, for instance, around 42.22 and start to show signs of reversal there on a smaller time frame. So just stuff you want to be aware of. So if we really break out here, if we break above 42.10 to 42.13, kind of like that area, if we really break out from that, then I think this is the next area to watch. The other thing that we might want to be aware of is we had this little balancing period here. And let's move this over. That could be what we're contending with right now, basically, is where was the volume in here? And it appears that we have, kind of something like this for a zone. And you can see that that's where we're sort of rejecting or at least stalling now. Now, I don't think this zone is as strong as this one was. Like this worked out beautifully, this trade. This caught the top of the day yesterday. So this consolidation, because this was the beginning of our really forceful push down. This, we kind of started to go down, but we were still within the balancing area, if you can see that, right? So like this push down didn't really get us quite out of the mess yet. It was the push that started from up here that got us out of the mess. So we could get some resistance here, but I don't know that that would act as like a final top, but it could, because we do have the confluence of all these other highs coming along with it, if that makes sense. So yeah, I guess 42.10 and 42.25 are sort of the areas, give or take some points there. That's why I draw the boxes out, because we want to give or take some points. I don't know that I need this one here anymore. Give or take some points there to allow us to catch some trades. And then sometimes what happens, and this is kind of what happened here a little bit too, we've got resistance here, we've got support here. We could have a flat open where we just range inside of this between 42.02 to 42.10. Sometimes you get really flat opens when you open in this kind of stuff before the market has to decide. And I'd watch for which one of these levels breaks, and that could be where the direction that we want to trade with. So those are some of the things I'm watching today. I will be scalping the market. You can trade with me. You can join our chat room for free, dpmtrades.com. We do have a paid membership as well, but you don't have to do the paid membership. We run the chat room for fun. We do not run the chat room for income. Paid membership gets you access to our swing and long-term trade alerts, and then also access to our indicators, which does remind me one thing I just wanted to show. One indicator that I use, and I actually created this indicator initially for the algorithms that I work on, and this is a volatility indicator that we created. And what it is there's two different iterations of it on here. This top one is the 5-minute volatility, and the lower one is the 15-minute volatility. So normally when I'm day trading, I'm looking at a 1 or 2 minute chart to take my trades. But I want to look at the bigger picture for my volatility. And what this often tells me is it helps to give me a bias. And I've talked about this before in videos. I think people think all the time about having a directional bias, right? Do I have a bias to go long or a bias to go short? And I'm not knocking that at all. I think having a directional bias is very important. But I think we also need to consider our bias as far as technique, or what type of approach is going to work in the market today. And what I mean by that is, do we have a bias for trend following techniques, right? Trend following strategies, or do we have a bias for mean reversion strategies? And this is something that I just don't see enough traders understanding when they're taking trades. And if you're trying to do trend following in a consolidating market, you're going to get completely beaten up if you try to use the same strategies you use in trending markets in consolidating markets. And if you try to use the same strategies that you use in consolidating markets in trending markets, you're going to get destroyed. And so we want to be able to have a bias. Now, you should get good enough with price action understanding that you can understand that bias, or the difference between a consolidating market and a trending market, and you can know when it's time to jump into a trending market, because there's sometimes fake outs. You should ideally study price action enough, but especially when we're trading with bots and things can be very fast moving, and often when we're trading with bots, we're trading multiple charts at the same time. We need to be able to see things at a glance. And so I created this for that purpose, but then I realized it may also help some beginner traders. And so one way that I use this is, if I'm going to be looking for trend following strategies, I want both the 5-minute and the 15-minute volatility meters to be positive, which will be purple. So right now we see the 5 minutes positive, but the 15 hasn't turned yet. But we want the 15 to not only be positive, we want it to be positive and rising. Once the 15 starts declining and volatility starts compressing on the 15, then on our lower time frames, we tend to be more successful with mean reversion type strategies. So there's some area in here where we don't lean towards either one of those, because for mean reversion strategies, I kind of want the opposite. I like the 15-minute to be below the threshold and compressing, which means the volatility meter is declining, this darker gray color. And while that's declining, we also want the 5-minute volatility to be negative. And if you look at this, you see that while this 5 minutes negative and the 15 minutes in a decline, mean reversion works really well. Like every time we go to one of the extremes, we end up coming right back to the mean, and that works great. And you could literally throw a fixed range profile on here, and like you can kind of just crush it, right? Like anytime you poke out of value, right? So this peak poked out of value, you take a short, you can at least target the point of control for a quick scalp, or target the other end of the value area. And then same thing, right? We poke out of value, we come back up. You just want to make sure when you're doing this that you give yourself some wider stops if you're going to take limit orders to get in, which is often what I do when I'm doing mean reversion. Or don't get in on limit orders, but look for confirmation. Wait for a buy signal. You know, like here, you get a deep enough pullback that you get a buy signal with enough room to take it to here. Here, by the time you get a buy signal, some of these, like this one, you could have taken, but some of them, by the time you get a buy signal, you're already so close to the mean that it's hard to take a trade. So a lot of times on those, I'm doing limit order entries. But so we can see in here, we kind of can't do either, right? Like our 15-minute volatility is negative, but it's also starting to increase. And our 5-minute volatility went positive, and we can see that mean reversion strategies start to become less effective now, right? You can argue that in this zone, you could still do some mean reversion if you moved your point of control to within those last few swings, right? It still works in here, but it's getting less likely to work. And sure enough, we get this explosion out of there. And so if you were to try to take a short here, you would have gotten killed. But that's fine. I mean, any strategy works until it doesn't, right? So you just keep playing it until you get a sign that it's not working anymore. But at the same time, so we're kind of not in our criteria for mean reversion anymore, but we're also not yet in a criteria based on the volatility meter to be confident about taking trend following. And the volatility meter, with this being negative, often sort of lines up with, even though this is the only indicator that I've made that isn't price action based. And so because of that, it's a little bit of a lagging indicator, just like moving averages are, just like most indicators are. And you can see that we're still negative, and for the most part, we're still very much inside of like all of this range and balancing area. And so price action's best because it's going to give you the most immediate information. But if you're newer, these can be super helpful. Or like in the heat of the moment when the market's opening and there's a lot of stuff happening, then sometimes it's nice to just have these to be able to glance at. So we don't take any buy or sell signals off of this volatility indicator. This acts as a filter, right? So if we want to do trend following type strategies, and this is going to tell us when we should maybe avoid trying those strategies. So it's a way to filter out trades. And again, so look here, we have this beautiful trending down, and we have our 5-minute volatility is positive. I apologize if there's background noise. It's garbage day here, and it's also a very nice day, so my windows are open. And then the 15-minute volatility turns positive and is rising throughout this whole push down. So throughout this whole thing, we are leaning towards a trend following type strategy. And then in here, there's still a lot of volatility. So we're not quite in a place where we'd feel confident doing mean reversion type stuff, right? And then as volatility starts to increase again, we start to think about whether we want to do trend following. This would be more to the downside, it'd be following the retracement. But we can see that the 5-minute volatility is really dropping off and goes negative pretty quick there and tells us, hey, be super cautious about trend following again. And then as this all starts to decrease and then everything goes negative, that's again where we can start to look at reversion to the mean and start using mean reversion strategies. So that's how we use the volatility meter as a filter to keep us out of market conditions that are not optimal market conditions for the strategy that we're trying to use, or to help us create that bias for strategy. And so right now, price action wise, I'd be leaning towards trend following, except for the fact that we're right under all this resistance. I would be very cautious taking a long in here. But we are, look how we're turning positive on the 15, right? We're starting to turn positive on the 15, and we're positive on the 5. So if this kind of holds like this into the open and we continue to move up, then we can be focused on trend following type strategies. And I really advise that whether the strategy you're using is effective in trending markets or consolidating markets. And then you get really good at identifying those market conditions and knowing when to not use your strategy. Or ideally, if like me, you like to be able to enter the market in the morning and sort of regardless of what price is doing, be able to find places to trade and sort of make your money and get out. I usually try to be, I start trading at about 9:30 and I try to be done by 11:30. Often, like yesterday, I was done by 10:30, so it was nice to just be done in an hour. Then you need to probably learn to have 2 sets of strategies at least, to have trend following strategies or a trend following strategy and at least a mean reversion type strategy if you want to be able to make money in any market. There's no one strategy that's going to make money in any market. The markets are too dynamic. They are too changing. In fact, it's really hard to find mechanical strategies in general that make money in any market. I've been building algorithms for the past 6 months, and it is profoundly challenging to do algorithmic type trading that is consistent. In most cases, you're going to get more consistent results and a faster growing equity curve with manual trading versus mechanical trading, because when you're following rules, you're going to have longer periods where that specific set of rules don't work. So those are going to be periods where you either need to stay flat, or the bot will kind of be flat because you win some, you lose some. and you're going to have longer periods of a flat equity and often longer and more substantial drawdowns as well with algorithmic type trading. And that's why I think training yourself to understand price action so that you can be flexible and not stick to one specific set of rules, but be able to read the market environment and adapt to it in the moment. If you want to be able to make income from trading, not just long-term investing, but really make income every day, try to walk out, or at least at the end of every week, try to walk away with closed out profits that you can withdraw and use for spending money or use to pay your bills, then you need to become dynamic in your trading, or you need to be really flexible about finding the right asset class or the right chart for your style. And I see a lot of people trading futures who like they only trade one chart, which is got nothing wrong with that. I mean, I mostly trade S&P when I'm trading manually. But they try to only trade one chart. They want to make money every day, but they also only have one strategy. And that strategy either works in trending or works in consolidating. And if they wait around long enough, they probably will have, like even within a consolidating market, you can often find one or two little trending scalps within the consolidation. But you have to like wait around forever and be kind of like eagle eye focused, because if you miss that one opportunity, like you missed your one good trade entry for the day. I'd rather be able to be flexible and just read the market information and make a judgment based on what the market's telling me, based on an assessment of risk, right? We want to find opportunities where the risk to reward is imbalanced in our favor. And also, just good money management. So as we're pushing into the 9 o'clock hour here and getting closer to the opening bell, again, we're also getting closer to these levels up here, 42.10, 42.12. This is going to be key. We may push above it at the open. I would just use a little bit of patience. I think today could be a tricky day because I think kind of anything's on the table. We could have a trending up day. We could have a trending down day. We could have an inside range day. So just take your time today and don't be too locked into whatever bias you had, or if you enter a trade, don't be so adamant about defending that trade if the market starts telling you something different and you have an opportunity to get out with a small profit or a small loss or break even. I would advise you to be nimble today. Right now, volatility is telling us to bias towards trend following, and of course, price action is telling us that as well. But again, just use cautious with some of this overhead resistance and watch how the volume builds, because price and volume are key. There's no indicator that's going to tell you better information than what price and volume are telling you if you learn how to read them correctly. All right, guys, I'm going to sign off. I'm going to kind of freshen myself up, stretch a little bit, get ready for the trading day. I've had all green days this week. Yesterday was all wins and no loss day. I didn't have any losing trades yesterday, so I'm feeling pretty good, and I'd really like to close off this week without a single red day. That would be great and send me into the weekend feeling pretty good. So I'm going to try to get my head on straight here and get ready to trade. If you want to join us, dpmtrades.com. It's a nice group. We have fun. There's no pressure. It's cheap. Well, it's free. But even our paid version is really cheap because, again, and I'll say this a million times, we don't run the trade group for income. I think a lot of these, YouTube guys, they are trying to make a living. They're trying to get rich by selling you trade stuff. I run the trade group because I like the community and I like to teach, and I get lonely when I'm trading by myself. So, that's why I have the free area in there, and I'd love for any of you guys to come join us. All right, have fun trading.